Uh, Mayuresh, if one looks at the kind of correction one has seen, and I was trying to work out the existing projections that there have been on earnings on most of the companies. Let's say I took the NSE 500 and tried to work out that. Then I gave that up because it appears that no one really knows what those earnings are going to be 1 quarter, 2 quarters down the line.
And that's precisely the point. I think the earlier estimates were anywhere between 15-16% earnings growth, and nobody's really sure because of the uncertainty, as I said earlier, in terms of the actual demand hit, both in terms of volume as well as value. So in this sense itself, I think when the government is looking at such a situation, I think the infrastructure spends are going to be top of agenda of the government. So in that sense itself, anything to do with power, something like a power grid is something that I've always liked. The results were fantastic this time round as well. The capitalization, the capex program, very much on track. The power transformer space is something that I'm liking. The gas transmission players, I think they are rarely affected by what is happening on the demonetization front, because it's all government capex which is getting put through. And with cut in natural gas and gas prices, my own sense is that even the input costs are significantly lower. Similarly, I think awarding of contracts on the road sides, infrastructure side, EPC contract makers, I think these are the players that I really look at on declines if the market does correct 4-5% from the current levels.
All right. Mayuresh Joshi, do you think that every investor right now is going to be a little, jittery as to what next in terms of government policy? What is coming next? No one knows.
Well, I think that uncertainty will loom around on it, but largely again, I think from a market perspective, I think if the market does correct 4-5% from the current level, you will see short-term pain, no doubt, in terms of how earnings will pan out. And that uncertainty will always loom. As I was mentioning, I think the uncertainty in terms of how demand will actually pan out over the next 2 quarters is an unknown at this point of time. But again, you're getting qualitative large cap stroke mid cap stocks which have corrected decently. The PE contractions have happened, and that is in sync with the earnings ground rates that one is really estimating at this point of time. So again, I think it's a wait and watch mode, as I said, at this point of time. But selectively, I think the stocks and sectors that we spoke, I think the government spending will improve over the next few quarters, and it has to, because I think the private capex is definitely going to lag behind, at least for the next 2 to 3 quarters. So government spending in terms of infrastructure, selective pharma names, and again, my own sense is that there will be a huge push through on the rural side. So one really needs to see over the next few months the government push through on the rural side of the economy in terms of what SOPs are announced, what kind of incentives are announced, and that will be very, very interesting for rural focused stocks going ahead as well.
So would you say that in a sense that there is a 2.5 month holiday for anyone who's planning to invest, because the big day would probably be 1st of February?
So again, I think that is one of the biggest events lined up for the calendar, because there are a lot of events happening before that. The Fed, what the Fed does, what the RBI does. My own sense is that RBI is going to cut rates sooner. So in the December policy, you're probably going to see an offset effect happening on the rate front with the Fed increasing rates and RBI cutting rates. Secondly, again, I think there is no perfect time to find the bottom for the market. So I think any further correction, I think incrementally 10-15% of an investable corpus should start coming into the markets, because any policy announcement either on the government side domestically or even from Trump's side on the economic agenda, if that turns out to be positive for the global markets, you might actually see the markets moving up again. So I think one should not probably wait for a bottom to probably happen. Nobody finds the bottom for markets anytime. So largely if it corrects further, say 4-5%, you should start putting your investable corpus anywhere between 15%.